Face. I'm Dale Pinkert. How are you today, everyone? Turnaround Tuesday. Hello, Patrick, Ziggy, everyone. Windsor, how are you? So just a couple of potential Turnaround Tuesday candidates. And with all the central bank activity this week, just my opinion, I trade with half of your normal size. In this environment, year-end trading, central bank trading, could be a lot of air pockets. Audio still soft, okay. It's because I'm looking at everybody better now, I bet. Better now, Patrick? Okay. So I was looking at USD MEX playing right around the 61.8 level here on the daily. Not only the daily, all time zones. And I noticed it, and then I checked out. Greg's look here is pretty much the same between here for B and then a big C to the downside for people that aren't subscribing. Greg Horvat has won awards on FX Street for his analysis. So Greg looking for this rally also to terminate here. So keep an eye on USD MEX here. If he's right, a C should begin. This is a B. So potential nice trade here in USD MEX. You need to have our traffic light page. Get ready for 2018. All the pairs that we're covering. And if I wanted a different look, a harmonic look, conventional, here are some of our pattern in plays. I agree with Blake. It's interesting. I just saw this here on pound. Also, nice call on the pattern in play that we have here in Aussie. Big update in Aussie. Kudos to Blaker. Basic technical. You don't have to be fancy. All you have to do is be consistent. So basic technical still works. Here's evidence. Okay. Again, what I really love about ForexAnalytix is that you could find everything you need right here. And the combination of the team, normally you have one person with their website, perhaps an Elliott Wave person, perhaps a harmonic person, but we have it all here. Blake, Nick, Grega, Stelios, Steve, and that guy. Okay, so here's a couple of other markets. I want to address the pound here. I still think that the pound has a shot for another high up here, based really upon the 4-hour. So this was a confirmed high up here in the pound. We're getting a real nice candle here. So I'm looking for one more blast up in the pound to take out these highs. Looks like Blake has a good one going. Also, pull back in Euro pound. It came a long way from last Friday's trading suggestion. Long here from 87 over 140 pips. So I'm thinking at least back to 760, maybe 740. And the implications of that makes cable the preferred long, Euro the preferred short. So cable looking good to me. Also, I'd be looking for possibility of a pullback in US dollar yen. I think I would wait until after the Fed. Maybe we get one more pop here. But on some of your shorter term stuff, especially since the bonds keep holding, and Blake keeps bringing up how the bonds keep holding, although the 10-year yield looks pretty firm up here. We may get a turnaround Tuesday. This is probably the most telegraphed Fed rate increase in a year that we should get. So that tells me to be on the lookout for a high here in yields and potentially a high here. Maybe we get one more push up towards 1380, 1390 in US dollar yen. Any questions on any of the instruments that I've covered today? Hi, Luca, Raphael. You don't have to agree with me. But I'd say one of the nicest looking candles working for you right now for turnaround Tuesdays right here in the pound. Okay. So we keep challenging breakdown levels, getting a nice turn here on the 4 hour. And to me, this looks like this could have been just a simple ABC. And now we're going to make a run towards the highs. And it's on the same side of Blake Morrow's call pattern in play. And Blake called the Aussie at that support level. That's looking pretty good too. So everyone happy today? Be careful with the central bank activity this week. A few ideas for you to consider and more to follow. Mr. Steve Volge on deck. How are you, Steve?
Hey, Dale. Good morning, mate.
Good morning.
I'm good. How have you been?
Good, bro. So we do have an interview. I made sure we had an interview today. And Alex at AlexFX will be joining us.
Perfect. Speaking of the interviews, I know I could do that in our private, channel, but it's okay. People will want to know as well anyhow. Have you planned any interviews for the week between Christmas and New Year's?
I believe I have, yeah.
Ah, you have. Okay. Asking because we want to know about the webinars. Then, if we're going to make them shorter, just between the two holidays or not. Okay, if you've planned. Okay, fine. Yeah, absolutely fine.
Yeah. So
okay.
Between Christmas and New Year's, I actually have 4 that week. Christmas falls on a Monday. Just like
I know. It's Tuesday, Wednesday, Thursday, and Friday that we will have a webinar. Okay. Yeah. And then again, Tuesday, the 2nd of the month. Okay.
Yes, I do.
New year, I mean. Yeah, okay. Perfect.
Okay.
Okay, then.
Never know with people, but they're on the schedule.
Okay, Dale. Okay.
All right, buddy. So what do you think of cable in here, Steve? I know, that you would need confirmation for a sell. I don't think you've gotten it yet, have you?
For cable? No, absolutely
okay.
not. And you know something? To be honest, I wrote that in the analysis post the CPI print. Definitely, the reaction we saw after the CPI print was not what the bulls would expect. We got a 5-year high in the CPI. We got a 3.1. The expected was not much lower, to be honest. It was 3.0, but still 3.0 is a high CPI number, and 3.1 is even higher than that. And that should tilt the BOE to be more hawkish. But the initial reaction was just the pound strengthened just a few pips, and right after that, actually, it started weakening, even reached the lows of the day, but now it has been strengthened somewhat since. Right. Regardless, although the short-term price action definitely does not look very bullish. You want me to take the screen, by the way?
Yeah, go ahead. The 4-hour candle looks pretty good to me. Looks like they may have taken out some stops.
Yes, it does.
Last week's low and turning.
Yeah, you're right about that. And on the 4-hour, if you see, we're still holding the bull flag support, but I really want to see some reaction happening from here or just a little bit lower, and I would like to see that happening, rather soon. So my main thesis is still that, this is a correction / consolidation after a strong move higher, and should break to the upside. Obviously, tomorrow in the evening at least in Europe, the FOMC is going to play a big role in what's going to happen. I mean, the dollar and its reaction to a possible rate hike, is going to be very interesting, and it's going to define how the dollar pairs in tandem are going to move for at least a little period of time. Obviously, some will be stronger, some will be weaker, but first of all, I have to say that if for some reason they don't hike, which I don't think, the chances of that happening is like way less than 5%. But let's say, for some reason that I cannot think of, they won't hike. The dollar is going to be destroyed. Okay, there's no question about that. The question is what's going to happen if they hike, which they will probably hike, which the market already prices in. Obviously, the wording and the statement is going to matter a lot, because what's going to matter a lot for the dollar is not if they hike tomorrow, which they should, is what the market will be expecting afterwards for the year that's to follow, for 2018.
Correct.
So
the statement, is there a press conference with the new Fed chair or with Yellen after the Fed meeting, or is it just a statement?
I think tomorrow we do have. Let me verify actually. Because
he doesn't take over until January, so.
Oh yeah. There's no question about it. Yellen is still in charge. There's no question about that.
Yeah, I see press conference at the bottom.
There you see. Yeah.
Yeah,
and you know something, that's what I remembered. And keep in mind that they always avoid to hike or cut during meetings that have no statement, because they always want to proceed to monetary policy changes when they can actually also answer questions. So yeah, obviously Yellen is going to be there tomorrow. Yellen is still in charge. There's no question about that.
It'll be your last.
And what she says and how she leads is going to be important of how the dollar reacts. So obviously, any move lower for the dollar is going to help, among other pairs, the cable rebound from here as well. Regardless, we all see this formation. There is a chance that they're going to try to take out stops first. Who knows? We might get some first reaction tomorrow after the statement, and then it can be completely reversed. You know how it is. I mean, we've seen all possible technical scenarios unfold in previous occasions, in previous meetings, in previous event risks. So you asked me about the cable. My answer is straightforward. My bullish case scenario is still alive, but I want to see the cables to start strengthening quite soon once again. Okay, otherwise things get complicated again. I mean, we will turn back to neutral and etc. etc. The same thing applies. The exact same thing applies to the Euro USD. I mean, I still remain bullish. I don't have a position here or on the cable, but I still remain bullish. But I want to see some strength coming in the market rather soon. I don't expect any real fireworks in any of the dollar pairs by tomorrow, because the more we come closer to the statement, obviously liquidity is going to thin out. People are not going to be committing to fresh dollar positions, so there is a chance that we're going to have a rather boring FX markets for the next 30 hours. And obviously, in this case, in these occasions, it's a good thing if people just sit on their hands instead of trying to predict what we're going to hear from the Fed, or even more importantly, how we're going to react. Because I can give you many examples that even if in advance you knew exactly what's going to happen, you would not predict how the market would react to that. I mean, we've had plenty of examples like that. One of the biggest ones, although not very recent anymore, is the US presidential election. I mean, if they told you in advance a week before that Trump is going to be elected, what would you be doing? You would be selling risk in advance, right? And now a year later, US stock indices are like 30% higher.
Yep.
Okay, so let's have a look at the Aussie and the Kiwi. I know a lot of people are monitoring. We are monitoring as well, obviously. I said yesterday that the first hurdle for the Kiwi to overcome is this descending trend line. Actually, we didn't manage to clear that yesterday. We're doing so today, though. Huh? We're currently testing the 50 DMA as well. So this is the first bullish achievement after a very long period of time. Now, what's the next one? It's clearing the 6970 area. That's like a very critical area for the trend. So If we actually manage to do that, then I'm going to be looking for this rebound to unfold further. So obviously, ahead of the Fed tomorrow, it's a dangerous thesis being long, but a retest of 69.70 might be in the cards regardless. So people that tried to bottom pick the specific pair and they achieved to do so, I think that they can keep holding on to that position by tomorrow Fed time and then see what they're going to do, protect it or whatever. Because obviously, if we see the dollar weakening and we do clear the 69.70 area here, I think that then the pair can extend, perhaps even accelerate towards the 200 DMA, which is at 0.71. Equivalently, if we see at the Aussie is showing some follow through. We had indicated multiple times since weeks ago the importance of the 75 area because it was a triple confluence of supports. Initially, it did stall the downtrend. Then we saw like an attempt to rebound. Today, we're seeing some acceleration. But once again, here, the key level is going to be the 76.40. Okay. So, so far, so good for.
That so was a great line.
Yeah,
like
it was a magnet. Yeah, it was a magnet. So far, so good. The reaction of it, is showing now to be gaining some momentum, but there is no real party until we clear 76.40. So tomorrow, it's an important day because tomorrow, multiple scenarios can happen. I mean, in all the pairs we've seen so far, we might, for example, get an initial, let's say, weakness, test these lines that we saw in the Kiwi, these resistances, I mean, that we saw in the Kiwi in the Aussie, and then get rejected and resume lower. Or we might just, breach them with conviction, and then we know that, a bigger rebound is in the cards. So tomorrow, I think, is going to give us a lot of information, for a lot of the dollar crosses. The USD CAD is another one of those. Here it is. It still remains in this range that we've recently had. Ideally, as I've said many times, I would really like to see this range break to the upside, and then I would like to be looking for opportunities to be short, perhaps at 130, perhaps at the 61.8, which is at 131.30. Yesterday, Grega showed that it might even unfold a little bit further. The next area of interest I have is at around 132.80, but I would really like to see, I mean, I'm not going to be involved with it unless it breaks higher and then shows some indications of a reversal. Now, having to do with the USD NOK, it's showing a reaction from the 840 level that we were, the area actually that we were looking for yesterday. Unfortunately, I didn't get triggered on my second position, just like for, I don't know, like almost nothing. So I only have my initial position. If we go to 839, I'm going to be triggered short on a second position. I would like to see a reaction from here, actually. So in essence, I'm looking for the NOK to strengthen faster or, more than the CAD is going to do. Let's have a look at the USD SEK as well, and then I'm going to go over some questions and before Blake joins us. The reason I wanted to show the USD SEK is because the USD SEK is also reacting from a resistance zone in the 61.8. Today, actually, it has already formed an outside black candle. And, this is going to be very nice if it actually creates like a double top here. Still, I would have confirmation only if we saw a break below this ascending trend line support. So I'm monitoring. I want to be involved with this as well, but I don't have confirmation. As you see, RSI divergence is quite clear here. It's what we call reliable because the first indication here, we first breached above 70 and now we are actually below 70. So this is a reliable divergence. So, first milestone is going to be closing today lower than yesterday's low because that's going to be a very powerful candle. and I would like then to see some follow through and a break below this trend line. Afterwards, I'm probably going to be shorting this pair as well. Okay. Let me go through a few questions. Dale, would be great if you could get Santa Claus on face. My kid has plenty of questions. Pound Aussie and pound Kiwi. Sure, let's have a look at them. Steve, why would the bias be sell risk on Trump's win? I think it's quite the opposite based on his road program, which includes a lot of benefits to look for corporations. No, Martin, what I said is that last year the market was viewing a possible Trump win as a black swan event, because he was very radical in many of his opinions, and the market was like afraid of the possibility. So almost every analyst was considering a Trump win before the elections like that would be a catalyst of like big reversals for the indices. But as you see, that didn't happen. Yes, that can be a cap and handle, Alan, on the USD SEC. I see exactly what you mean. It can be, but we first need to clear the 852 area, right? Until then, you know, this is a nice area, you know, to be rejected, and that's also why I'm looking for confirmation on a break below the trend line to actually exclude the possibility that something like that is going to be in play, as you mentioned it. Hi, what's my opinion on DAX? My opinion on DAX, if you were here yesterday, is the exact same one that Gregor has. I have also been looking, I'm actually short the DAX, and I have also been looking for this consolidation to fail for at least one more leg lower. So I remain of the same view. I would want to see some kind of a failure. Obviously, this is not a triangle, might be like a flag instead, because as I've said many times, and I want everybody to remember that, you can never be sure of you know, the exact technical nature of a corrective move, because as it unfolds, many different scenarios can play out. I mean, initially it might look like a triangle, it might end up being like an ABC or a channel or whatever else. So, you know, you can make assumptions when you have little price action, but you can never be sure. So regardless that this isn't a triangle, I'm still viewing this as a consolidation after a strong move lower, and I'm expecting at least one more leg lower to unfold, perhaps towards the 61.8 at 12,500, perhaps even lower, before I can look higher once again. This is also one of the reasons that this bodes well with my thesis that I'm also expecting the euro to strengthen further. Okay, of course, you know, that's an assumption. That's an assumption that it has a higher probability of happening than 50% in my opinion, simply because it also follows what I see as a price action from the recent moves. So you know, this is how I'm viewing this at the moment, and I know from experience that it's something that has a little bit higher possibility than 50% chances of happening. So let's have a look at the pound Aussie and the pound Kiwi, because already two people have asked about them. Okay, pound Aussie. Testing today, actually on the lows, it tested this horizontal support area. If you remember, I mean, we actually drew this plenty of days ago when we were up there. I said that I would be expecting a push to new highs and perhaps a correction down towards the channel or this horizontal support area. We're currently testing that area. Quite an important support. If this holds, then no reason to be bearish, right? On the other hand, if this area fails, then I think you should be looking lower towards the 173.50 area. Regardless, the series of higher lows has not been broken, so you caught the reversal, good for you, but you know, always keep in mind that for now, you should be treating that as a counter trend move. Same thing applies to the pound Kiwi. We are now reaching this ascending trend line support. I think that the 191 area is an interesting area for the pair to find support. That doesn't mean that it's going to happen, but since we're in a clear uptrend, you know, we're looking for support areas right there. Also the 50 DMA, the ascending trend line. So, you know, monitor that area for a possible reaction. Okay. Now a break below there, it starts complicating things further. But, you know, we can talk about that tomorrow again. We had the RSI divergence play out for some time now, though. So the pullback was more or less expected. The question is the nature of the pullback. So far, I have no reason to treat it as anything else than corrective. DAX 1 hour chart, bull flag, says our friend here, sleep tight baby. Listen, mate, for my own good, I never look at 1 hour charts. Because for me, for my trading style, they just produce noise. So I take your word for it, but I'm not going to act on it. Okay. It purely has to do with my own trading style. I don't like to trade short term, and you know, short term in essence confuses my sentiment, purely my sentiment, and you know that's why I avoid them, because I want to be as much as possible detached from short-term moves that you know might trap you in changing your longer-term plan. Euro pound.
Good answer. Steve, one thing I noticed in DAX is that high in DAX was a confirmed high. So, you know, whether we get that break first, that high, I don't think will stand. So,
no, I agree with you. I have no reason to be.
Right.
Short the DAX or bearish the DAX in the medium to long term.
Yeah.
It's in a clean uptrend. But I do believe that the move lower that we had some time ago was impulsive, and I do believe that at least one more move lower should unfold before the overall trend takes over. Okay?
Yeah.
As simple as that.
Got you, buddy.
Okay. The euro pound. Okay. The euro pound, first of all, is once again finding resistance in this horizontal area that you see here. You can see how many times this area has acted as support, resistance, support, support once again, resistance. So, you know, first of all, we remain somewhat in a range. As with the DAX, if you see this price action looks very, very similar to the DAX. Strong impulsive move lower, more or less a horizontal consolidation. I expect this to be resolved to the downside, most likely than not. In the middle of this area, we have this support resistance zone as well. So first of all, unless we clear above this, let's call it 88.50 to 88.80, this 30 pip range, I have no reason to be bullish, right? So first of all, that's one thing. Second of all, even if we clear above it, I want to see a break of that trend line to then believe that whatever kind of a correction we had is over and we're going to resume higher once again. Until then, I would expect it sooner or later to fail for at least one push lower, perhaps towards the 83 area, than anything else. So that's my view on the euro pound.
It was interesting, Steve. It cleaned out both the longs by taking out those stops, and also probably cleaned out some bears, reversing a breakdown.
Yeah.
So
yes.
you know,
yes.
so then now it could go, because a lot of the bears were squeezed out.
You're absolutely right. You're absolutely right. It squeezed out some people. It got some people scared with, you know, the 2 strong days of after the reversal here. So yeah, sure, why not? Why not? You know how the market is. In most occasions, it wants to inflict the maximum amount of pain to the maximum number of participants, right?
Sure did that Friday. The longs were saying, why is the market 50 above where I got I got stopped out on my longs, and the shorts were saying, I thought it was a breakdown. So they got them both in one day.
PPI, by the way, we got data, producer price index 0.4, while expected was 0.3, core PPI 0.3, expected 0.2. But to be honest, I'm not seeing any real big reaction from the market at the moment. So more or less a non-event. The market pays more attention to the CPI prints than the PPI, although we know that the producer price index is considered like a prelude, like a a leading indicator to the CPI. The market has proven that it doesn't pay so much attention to it unless we get like some big surprise, and it actually more or less waits for CPI prints to form expectations. Plus, one thing more that I have to say about it is that the market has been looking for inflation to put in for years now, and after disappointing over and over again, I think that it has become more numb than it has been in the past, having to do with any indicator that shows inflation. I have a question about gold, so sure, let's have a look at the metals. Let's start from gold. Nothing has changed about gold. I mean, I remain short. I have 2 entries here. I'm comfortably in the money, and I really expect the gold to move lower. Just look at it. It can't even rebound, even if its life depends on it. It's so heavy. It's so heavy after breaking the triangle, especially if we get if we don't get dollar strength tomorrow. I really expect it to accelerate lower towards the 1200 area. So until then, of course, we have the 1237 being the 78.6. That might create some kind of a reaction, but really, I see absolutely no reason for somebody to want to be long gold at the moment. I mean, nothing in the chart shows like a rebound is coming. Same for silver. Look at it. I mean, yesterday it tried to produce some follow through to Friday's inside day. It actually closed on the lows. Today, even more. I think that this price action is purely a short-term bearish consolidation. I mean, the fact that we didn't even manage to rebound from there somewhat before resuming lower tells me everything I need to know. And unless we get some like very, very weak dollar coming out tomorrow night after the FOMC, I really expect them to resume lower. I mean, the charts look very, very bearish for both of them. So I'm keeping my gold shorts. I'm not involved anymore with silver. I booked profits here, and I'm not going to be involved with silver again unless it rebounds further. And I think keep looking lower.
You've been bearish these precious metals for the last few days, and I mean, actually the last couple of weeks. So
yeah,
it's been a great call.
Blake, they made my month, mate. I mean, within a few days. I mean, I went silver on the break of the triangle, and it's one of the few times that you get very lucky that the moment you get involved with something, it just keeps moving non-stop in your direction. You know the feeling. It's wonderful.
Yeah,
always.
No, that's great.
Whenever it happens.
That's great. The one thing that I see with the precious metals is both of them are approaching some good support down here, and from a Fibonacci standpoint, they're both.
I agree with you, but you have to also agree that for now, I mean, price action seem so heavy still, right?
They vary. Especially in North American trade. It's like the market just sells them immediately. Like soon as people step in, they get sold pretty quickly. But they're also, if you think about the declines here, I'll go ahead and
go ahead and take over.
Yeah, I'll take over since you've been talking about a lot of different things. So let me go ahead and cover this. Okay, so here's gold, like for example. Okay, so if you take gold, this is a 4-hour chart, and you just take it from what day is this? This is the 27th of November. Okay, so you're talking, we've had a 4.4% decline in gold just in the last 2 weeks. Okay, that's a pretty big move in gold. I mean, it really is. Here's silver. Silver is very similar. You can look at the move from the 27th of November down to here. We've had an 8, almost 9% decline. So and that's an equally big move. Now, when I was talking about nearing support, let's go over to the daily charts here. And I don't like to, and let me get rid of this. We don't want that. No. Okay. Here we go. Yeah, I want to put it right there. Okay, so we're at 161% extension of this last move. You can see it right here. Let me grab a pen. Okay, so of this last move higher from the low to the high, there's 161% extension, right? Also oversold and divergent. Okay, so you can see the RSI is starting to diverge. So silver's, at a point where after a 8.5, almost 9% move lower, you've got to start being a little careful if you're on the short side. Not saying that if you're short you shouldn't stay short, but there might be a bounce back to, like, let's say 18 or 1620, 1630. That shouldn't be much of an issue, and still, staying and respecting a downtrend. Okay, so yeah, you got to be careful there. And I'm not saying just because of silver, because I got to take a look at gold. And gold, very similar situation. We have 161% extension of this last, the bounce here. So
and
that's
the 78.6.
And the 78% retracement of this low to this high. Okay, and this is the move from the summer. Okay, so we have a 78% retracement. So we got a fib confluence right there. Now, and also let me stop for a moment and remind everybody, okay, about gold, because everybody looks at gold and they're like, oh man, it's so bearish. Yeah, okay. Let's take a look at the multi-year trend line from the highs of 2011. Okay, down, 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 down. We're almost testing. I mean, we still have some room, maybe another 20 points or so, or 40 points or so, but we're getting. What'd you say, Dale?
A week or so ago, it looked to me like it was going to go to your blue line.
Yeah, and it still could, yeah. But we're, like I said, we're also facing some fib confluences down here. So if I was short, I would be pretty careful about being short. And so these are now, you're getting to prices where you're going to get value investors that start looking around saying, okay, this is more of a value play at this point. I wish, going back to silver, because this spike lower right here, this was a complete stop run, and some of you guys, if you were listening into the webinar at that point, you might have remembered that we were, this move here, this spike low, was a stop run, and we don't know how low we actually went. We don't know if different exchanges posted different things. If you look at different quotes, there's different feeds there. I wish it was more of a reliable spike down here, but from a harmonic standpoint, you're talking about something that could realistically be setting up as a, again, whether it's a bat or a Gartley, depending on where the spike is drawn from, we're getting to a place down here that we could see a relatively strong bounce, and that, I think, people have to pay attention to, that we're getting to, getting to levels that could create that type of bounce. And you're starting to see, you know, when you talk about gold and silver, and this is, you know, obviously we were just discussing gold and silver here, but let's take a real quick look at like the Aussie, which the Aussie, if you've been utilizing ForexAnalytix, you knew that we were right down at trendline support. That's why we have the pattern in play. We broke this this 75.50 level, and it's actually given us a bit of a boost here. And I'm long, and actually I just added a little bit this morning. But this, if the Aussie, and then let's take the Kiwi dollar, the Aussie and the Kiwi are showing signs of life here, then does it make sense that the base metals are also going to start showing some signs of life as well? That's why I think that if you're short silver or short gold, you have to be very careful, because the currency market is actually showing you that downside pressure on those metals may not last. And therefore you have to, you know, that's why I'm already, you know, I'm already long the Aussie. And I look at the Kiwi dollar. I had a bid in last night. Matter of fact, I need to cancel my order. Hold on. I had an order at 68.91, and I'm canceling it right now. I had an order at 68.91. What I was hoping was going to happen last night, and it didn't. I was hoping that we would do this. Okay, a little deeper. We only got to 69 or just above 69 and then bounced. But this Kiwi is extremely bullish. I shouldn't say extremely bullish. So let me rephrase that. It's bullish coming out of this triangle. It gets really bullish in the event, and not saying that we're doing it, but I'm just saying in the event that we break above 70, let's just call it 70-40, 70-30, 70-40, we break above this, that Kiwi is going to get, it's going to get its squeeze on. And yeah, you could you know, also attribute that type of move to the new RBNZ governor coming in. But regardless, it's getting a boost here, you know. But can it put a floor in base metals? I think it can, and that's why I would say if you're short precious metals, you need to be a little cautious here. So anyway, Dale, you've been kind of quiet. And that would be kind of quiet and probably went to the bathroom, maybe. Let me see if I can take some questions really quick. Yeah. Hey, Dale.
Right, I was on my way.
You were on your way. You're like, damn, I was just gonna go to the restroom. Right. Hey, you know what? I'm gonna answer some questions, and then we can come back and bigger. Okay.
I have commodity kidneys. All right.
Michael says, Steve, Blake, take a look at the Aussie New Zealand. Thanks. Yeah, let's take a look at the Aussie New Zealand. Now, you know, the Aussie New Zealand, I've turned bearish, especially over the last, you know, couple of weeks. The reason why is because of this false breakout. I mean, that's the bottom line. Is this caught a lot of people, myself included, and I took a loss trading this Aussie New Zealand here. I bought it pretty aggressively coming through here, and then I ended up taking a loss as we came back through 112, and then it became really sloppy. I wasn't, you know, I haven't touched the Aussie New Zealand in a few weeks since I got out, like somewhere around here. But we were kind of following this loose, like very loose channel, and if you know, I was just kind of, you know, floundering around, if you will, you know, through here. And I wasn't really too sure what to make of it. But when we broke through this 110 level, I was like, okay, the Aussie New Zealand is now at risk of pushing back down towards the support. And I really do think, I think that's entirely possible at this stage in the game. So what I would be looking for if I was trading the Aussie New Zealand, which I'm not, and let me just rephrase that, I'm not. If we break through this or I shouldn't say rephrase, let me reiterate that I'm not. If we break this 50% support in the Aussie New Zealand, I think the risk of exposing a move back down to here is quite high, okay, down to the 105 level. So again, I'm not trading the Aussie New Zealand. Personally, I'm longer term bullish on the Aussie New Zealand. I do believe it's going higher over time. That means that I'm going to have a very difficult time trying to trade it on the short side. I always do, and I have for the last, since probably about mid 2015, somewhere around here. I've only traded it on the long side. I don't trade it on the short side, so I miss out on these opportunities as it moves lower. That's because on a macro level, I'm still more bullish the Aussie than I am the Kiwi. So therefore, I won't buy it until we break above these highs or we get back down here to like 104, 90, 105. I mean, down there, I'd be more interested in being long the Aussie New Zealand. Now, that doesn't mean that there isn't going to be a catalyst that pushes me into the Aussie New Zealand on the long side at some point. I mean, like, let's say we get a shift from the RBA, that the RBA all of a sudden becomes really hawkish. Like we get a signal from the RBA that oh wow, it's time to really be bullish the Aussie. Well, maybe I then turn around and start buying the Aussie New Zealand as a result. Or maybe the RBNZ comes out and they really tilt towards a dovish stance, like they're going to stay neutral forever. Then I might become bullish Aussie New Zealand ahead of getting down here. Excuse me, getting down here. That may be the case, but for right now, if it was just relied on charts at this moment in time, and there's no other real reason, then I'm probably not going to get bullish until we get back down here to the 105 level, 104 and change, 105. So again, I think if you are trading it and you're currently just looking at the charts and saying, okay, well, how am I going to trade this thing? I think really it's below here. This and actually, let me redraw this a little bit. This is where that's a pretty big support zone as far as I'm concerned. And then so if you break below that, then it opens up a lot of downside. So hopefully that answers your question. Thanks for writing in. Robert says, thanks, Blake. Refreshing voice of sanity over mania hype. Okay. Raphael says, good point, Blake. Thanks, Raphael. Dimitri says, hi. The gold also closed to the 50% fib from December 2016 lows. Thanks. And let's take a look at gold. Let me make sure I'm looking at the same thing as you. So here's gold. Oh, from here. Yeah, I guess we probably are pretty close, aren't we? So let's take this low to the high. Oh, thanks, Dimitri. I wasn't even looking at that. And yes, that's just a furthermore confluence of support down here for gold. So I think you're right. Hey, a couple other things, and I'm going to continue to answer questions for you guys here in a moment, but a couple other things that I wanted to point out that needed to be pointed out. I actually just shorted some US dollar Mexican peso this morning, not too far from where we're at. Let me show you the reason why. Okay, so here's the US dollar Mexican peso. We've had a hell of a bounce just over the course of the last couple of weeks. You can see we've had this nice bounce. We are actually probing this downtrend line. You see this one from the highs to the spike high right there. Okay, to today's high. This takes us right to basically today's high, maybe a little higher, maybe 1912 or so. And again, with my opinion of these commodity currencies and with the potential for silver and gold to maybe start to bounce, copper looks stronger, the Aussies showing some signs of life, the Kiwis starting to show some signs of life, I don't mind buying some pesos here. So I actually short the US dollar Mexican peso. Very small position, but I figure, you know, if you're you know, looking at this daily chart the way that I am, I mean, this is day one, right, or today, and there's a lot of time left in today. The only way I'm going to really keep it, and let me just kind of draw it out for you. The only way I'm personally going to keep this trade is if this candle turns red or close to it. So if we get like a you know, like a gravestone doji or something, and we see us reverse to the lows, and we close near 19, then I'll feel pretty comfortable about staying short the US dollar Mexican peso. Obviously I don't want to risk too much here, but it I think is a decent setup, especially after, you know, this is a pretty nice move higher. So I think that we, you know, reverse back off of here, back down towards the mid 18s.
Grega's count too, Blake.
You know what? I didn't have an opportunity to look at Grega's count, so let's take a real quick look. You know, I try to look as much as possible when I get up in the morning, but sometimes I'm pretty busy. You know, going through.
Same deal.
Yeah. So, oh yeah, looking for, yeah, his counts maybe to, yeah, 1912. That's about exactly what we are discussing. So, yeah.
Very timely.
Very timely, and again, I hadn't even looked at that, so that complements my analysis, and that's one of the benefits of using ForexAnalytix. And you might have asked, well, Blake, why didn't you get a chance to look at that? Because when I sit down, I don't get an opportunity to look at everybody's analysis, not like you do. You know, I actually see these support and resistance levels that you see through here? See these that have been triggered? Guess who does those? I do them. I do them when I step in the morning. Now, we actually got a question from one of our support staff, which she forwarded it over to me last week. Somebody had asked if those are automatically updated or manual, and all these support and resistance levels are manually updated, and they're manually updated by me, and sometimes Steve will do them, or, you know, depends on, you know, who's on duty, but mostly it's me. And we come up with those levels for several different ways, whether it's a trend line or fib level, or, you know, horizontal support or resistance. They're not just pivot levels or automated stuff. It's all manually done, and we try to update those once a day, at least once a day, if not more. And so that gives that personal touch, if you will, to ForexAnalytix. It's not like some computer generated number. It's actually taking a look at the charts and saying, oh, okay, so because we have multiple lows here, it's you know, the supports here, and because it's a 38% retracement and multiple rejections over the course of several days, the resistance in the euro dollar is 118.10, which is 118.10. So all of those numbers all generated, and that's generated by me as well. And some days are busier than others. Like today, you know, I was frantically trying to move through some of these because so many of them had gotten triggered, especially with like Bitcoin and the S&P and Ethereum. So I was kind of cruising not only through the majors, but in some of the crosses like the euro, you know, or the pound Aussie, pound New Zealand. When those get triggered and they need to be adjusted, you know, that's usually me that comes through. That's why I didn't get a chance to read. Unfortunately, I didn't get a chance to read the US dollar Mexican peso analysis by Grega, but that's cool that he sees the exact same thing as I do. So that's awesome. And thanks for pointing that out, Dale. Roderick says commodities have pulled the Aussie. Together with the low volatility, Aussie loves low VIX. And yeah, you know, okay, let's talk about that, Roderick. Roderick, you're pointing out something of a correlation where the Aussie has traditionally, and let's and Dale, we'll talk here in just a second. Traditionally, here's the Aussie, and I'm gonna leave you with that right there, and I'm gonna compare that to the S&P. Okay, now a lot of times you may think that the Aussie dollar is very closely associated with risk. But do you see, and Dale, do you see how back in 2014, late 2014, that correlation broke? Yeah. Actually, you could probably say that correlation broke before that. That correlation broke back in 2013. Okay. Ever since then, the correlation between the Aussie and volatility and the S&P has really broken down. So, with that being said,
Chris Lowry's heart that broke.
Oh yeah, I mean, well, if you think about it, Dale, people like Chris Lowry, and I'm using him as an example, and how long did he see this rally in stocks right here? Here, let me redraw this stuff. How long did he see this rally in stocks and buy the Aussie yen as a result, right, before he realized that that didn't work? See, these correlations broke down years ago. And that's why over the last year or two, we've talked about, hey, if stocks come down, I'm not necessarily convinced that the Aussie is going to go down. I'm not necessarily convinced with that. And a lot of times when you see correlations and they break apart as they have here, guess what happens? They come back and meet in the middle before they start recorrelating again. So I'm not necessarily sold on the idea that the Aussie is going to go down if stocks go down. Not in that sense. And that's why and if you've listened to this analysis for the, or these webinars for the last, year and a half, or however long we've been doing the face webinars, I've been very skeptical about that, and I still am, and you can now see why. Forex Gal says, Mr. Blake, your take on the US dollar Swedish krona, thanks so much. Sure, and your guess about me going to the Northeast next week is correct. I am. Unfortunately, it's going to be. I'm not going to be able to. I'm not doing much. I'm not doing any messing around really. It's training stuff. U.S. dollar Swedish krona. Okay, so let's actually discuss this for a bit. Let me get rid of this downtrend line. I'm going to get rid of that, and let me get rid of this fib. Okay, for a moment. Okay, and let's take a look at the longer term aspect of the U.S. dollar Swedish krona. So first thing is first. So you got the U.S. dollar Swedish krona that has completed an inverted head and shoulder pattern. So if you guys have seen this, it's shoulder, head, shoulder, neckline, head, complete. Okay, and you can argue with me and say, well, Blake, we didn't quite make it. Well, it's close enough. And sometimes in the market, you have to assume close enough is going to be good enough. All right, so you take this high, this low, and we've reached a 38% retracement. So what that tells me right now is that while we're below these highs, very skeptical about being long the US dollar Swedish krona, and I'm not long. And actually I traded it on the short side about a week ago. I want to say a week ago I traded this short, like right here, right there, and I actually made some money. I got caught in this a little bit, but I still made some money, and I haven't shorted it in the last couple of days. But I personally think that while we're below this low, you have to be very careful about being on the long side of the US dollar Swedish krona. Now, if we do break out, if we break out that way, then I think that opens the door for a lot more gains. But right now, you have to be a little nervous about that. And I look at the euro dollar, and yeah, I know the euro's down a little bit today, but overall the euro still looks pretty bullish here, and longer term. So if the euro starts to break higher, especially over the course of the next couple of days, that's going to weigh on the US dollar Swedish krona, obviously. Okay. All right. Thanks for writing in. Colin says, have you a chart on the US dollar Turkish lira? I don't, but I'll look at it really fast. There's the US dollar, Turkish lira. Only thing I'd have to say here is we have a false breakout on the highs, and now we've broken that uptrend line, and yeah, I wouldn't want to be long. No way, no how. That's my 2 cents on the US dollar, Turkish lira. All right, Dale, you have an interview. I don't want to take up any of your interviewee's time, so I'm going to pass it over to you.
Great job like usual, Blake and Steve, and I'm now going to pass the baton to Alex Ivanovich. Alex, thank you so much for coming back and returning to face. I'm passing you the baton, buddy. So just waiting for your charts and your voice. And some great looks that I get in my Twitter stream every day from you.
Hello, Dale. Nice.
Alex, how are you, my trading warrior brother? How's it going?
I'm good. I'm good. How are you?
Good.
How are you?
Great to have you back. You know, for me, I'm very familiar with your work. I see your ideas every day in my Forex Stop Hunter stream, and it's been a while since I talked to you. Maybe just begin with sharing with the audience how you got started in the business, and looks like you have a pretty good tan, like you've been on vacation. So why don't you tell us a little bit about how you got started in this crazy industry?
Yeah, this crazy industry attracted me long years ago. It was 10 years ago. I started trading stocks, domestic markets, European markets, and after that, all of the markets. And sometimes when the crisis loomed out in 2008, I started to be interested in the Forex industry and currency pairs. So I switched to that because it is faster, a lot of opportunities for more of the good profit, and a lot of opportunities to spread my knowledge about everything, about the trading psychology, discipline in the trading, and all of the other things that are required for good trades, like macroeconomic knowledge, technical analysis especially. And I started to learn price action, technical analysis, and I started to apply all of that into my trading. So I developed my own system based on simple moving averages, Andrew's pitchfork channels, and
yeah, you use everything, buddy. I mean, you know, I was going to ask you to describe your style and your methodology, but I see from different tweets that there are so many different things that you integrate into your views of the market. What do you emphasize? What's the most important thing to you when you're looking at charts? What carries the most weight when you're looking at a chart for direction?
Actually, the most weight carries the simple moving averages, and they give me a clear direction of the market, and also Andrew's pitchfork channels, because they are precise and they can give you an insight and fast insight of everything happening in the markets, as well as price action recently, because of a lot of the swings in the market and the range market. So we need to put a lot of weight on price action, on candlestick formations, which I learned from Steve Nissen mostly.
Well, you came up with a formation that I've never heard of before, called the Sacred Temple. Where did that come from, my friend? The Sacred Temple formation.
That is an improvisation of my idea of a formation, because the DAX is moving so crazy in this wedge lately. So you can't call it anything else but the Sacred Temple. Because
so when you put a position on there, you better get down on your knees and pray.
Yeah. Yes.
Okay. All right. So I see a lot of your views manifest, Alex. So what are we looking at here? I think you have we're looking at gold, right? Oh, we're looking at the guppy. So
Yeah,
tell me what you're thinking here.
yeah, I'm looking at lately, especially at the pound and the pound-related pairs, because I like what I see now. I see a break of this long-term channel and this
Oh yeah, that channel.
downtrend line. Yeah, that channel on a monthly.
Okay.
Yeah, yeah.
So you're constructive here now.
Yeah, yes, I am.
Okay.
So it's building up, and I think the pound will be maybe the next year most productive trade on all of the currency counterparts, because there is a lot of space in the pound for the upside. The thing that I'm looking now is this daily formation forming today on the pound yen. So let me just remove this. If we stay like this for the whole day in this maybe consolidation candle, we could have a good long trade with the good risk reward for the traders that want to risk smaller amount of pips, because perfectly is lying on this broken trend line. Of course, it could go to the downside a little bit more, but if you put a stop loss just below this candle, this daily opening, then you are risking a smaller amount of pips than anything else. So let me switch to the pound and to put the whole story together about the pound and why I think this could be the best trade next year. There is this trend line recently broken and actually is moving inside this downside long-term channel. Let me switch to quarterly. Maybe it will be so here. And this is that historical resistance broken to the downside. And I think we are basing and moving back to the upside. Of course, we need to wait for the quarterly close and the monthly close, but as we can see now, and I hope that your viewers see this clearly, there was a pin bar pointing to the upside, and as long as we are above, let's say 1.31, we are safe for the upside ride into 1.4. Okay. So I'm expecting pound to give us more. Of course, it will be volatile because the cable, you know, everybody knows that it is a wild side and it is a wild drive, especially with these Brexit talks and everything else. But this uptrend is giving some kind of a conviction and a good risk-reward opportunity, which is the most important in trading, of course.
Okay, so constructive cable, bull-bear line is 131 for you. What else are you looking at for 2018?
Yeah, I'm looking at the yen pairs because I think they are trying to continue its continuation to the upside. Also, one of the potentials is, of course, the euro-yen. It has a good ride to the upside and a bit of consolidations recently in the recent weeks, but it is supported from this zone 131 to 133. So we could see an upside continuation. If we switch more to the bigger picture, you can see what I mean. So it's moving inside this bigger channel and is moving to the upside. So if the euro continues to be strong or to stay in a consolidation, and yen pairs, especially yen across the market, will start to weaken, then the euro yen could be a perfect opportunity because also it is giving a good risk reward. And as long as we are above the 131.7, which is 100 SMA, and this median line, we are safe for the upside continuation. So I think the yen pairs could give a good profit opportunities. Also, one more pair that is riding on the wings of the Kiwi strength is the New Zealand dollar Japanese yen, also attached to this lower side of the channel and bouncing higher, breaking the downtrend channel from this hole that has been digging recently. And this reversal higher give us a confidence that it will continue in this range and possibly till 84 in the coming weeks and months of the 2018. So also for me, the New Zealand dollar Japanese yen could be a good trade. We could see a dip to 78, so it could be used for a little buying opportunity for getting long again for the continuation higher.
It seems like the only yen cross you didn't talk about would be Aussie yen, which has also had a pretty good run. And I know you've been negative metals, and you know, we might be approaching something, but what are you thinking here, Aussie yen? To me, it looks like it could make a run here. I was looking for a pullback that I never got last week after NFP, but it doesn't that have a stronger formation than Kiwi yen?
Yeah, actually it does. The only thing that I'm concerned about is this trend line, which was broken to the downside. It doesn't have to mean anything.
Okay, so Kiwi yen, all right, now I understand. Kiwi yen has recaptured the breakdown of uptrend line, yet Aussie yen has not yet. So that's why you prefer the Kiwi yen.
Yeah, that's why I prefer the Kiwi yen. But looking at this, Dale, looking at this, maybe the Aussie yen has a better risk reward if this will reverse and shoot higher. And we could expect that because the Aussie dollar has based around 0.75, and gold could pull back a little for a new short opportunity. So the Aussie yen could be boosted higher, and risk reward is good. Stop loss should be safe below 85, maybe 84.9. And looking for a ride higher, yeah, you got a good point as always, Dale.
Okay, Alex. So you like cable, you like the yen crosses. So I'm assuming if you like the yen crosses that you're probably bearish interest rate bearing instruments, bonds, well, bullish yen would also probably be bearish gold. So maybe you want to talk about gold or the bond market. The bond market, it's holding up pretty well in the face of all the bearishness in the world. I'm wondering if you think there's one more bear market rally left in bonds that could be commensurate with maybe a correction in stock indexes in the first quarter.
Yeah, of course. The bond market is pretty interesting at the moment. And let me just remove this. This is a 10-year.
This is your yield chart.
Yes. Okay. This is a yield chart. So from this perspective, looking, we could have a yields rise. So the bond prices could go lower from here because it is a good support, especially this monthly candle is looking good. Of course, we could see a little bit of a pullback as well as in the dollar, but in the long run, yields could go higher, and the target could be this 3 points. So looking at the yields, the bond market, the bond prices could go lower from here. And regarding the gold, yes, I'm very bearish on gold. So it is. I will show you now why. This is not a clear chart, so let me just try to remove some things. There was an downtrend channel broken to the upside, and we started to form a new channel, but this consolidation never went far beyond 1,380, and this uptrend channel is now broken to the downside. And especially, I'm looking at this trend line recently that is being broken, and I will draw another one. So let me remind you, this is the monthly chart, and this is a big picture, and this is the key level now, the key crossing, horizontal resistance and the trend line, and it is 1,214. If we break below that, then 200 SMA is at sight. And you know, the market is changing, and a lot of the money flows are going to these cryptocurrencies and elsewhere. So traditional gold.
Alex, have you done any personal trading in crypto at short side?
Personally, I'm trying to do some trading, but it's so hard. These trends are so hard and unpredictable and so parabolic that I'm afraid that it will burst soon. But it is very hard to
get in. Everyone thinks that if they finally get in, that'll be the top.
Yeah.
Okay.
Yeah. Yes. Yes. So
all right.
That is why maybe these high yielders before the cryptocurrency markets are suffering now, such as gold, but also because of the dollar, which is getting stronger. So let me show you just the dollar, because everything is going around it. So
okay. There's your linchpin.
Yeah. Okay. So again, the big picture. This is range continuing, so nothing happened really here. The dollar is still in its bull phase, and on the monthly chart we had a bearish candle here. Let me just try to show you. We had a bearish candle.
Doesn't this conflict a little bit with your longer-term view in cable if you're looking for one more blow-off move to the upside in the VIX?
You know, Dale, what I recently spotted on the market is that we have an inverted correlation between the pound and the euro dollar sometimes. So I think the pound doesn't give a damn about the DXY anymore. So that is why I think the pound will ride on its own wings, as it was riding to the downside before, not looking at the dollar so much.
So the pound, is trading to its own beat outside of Dixie influences. All right. Yeah. So you're looking for a pretty good move to the upside in the dollar.
Yes.
97-ish. Yeah.
Yes, 97-ish, and I'm looking at a little correction here today, maybe. Just let me try to center this chart on the daily. Okay, so there was a little correction, and maybe we will see in the other half of the day, maybe and maybe in the coming days we will see 93.5 again before a continuation into 95.70 and the 96.97.
Okay, some great looks. Alex, I really appreciate any particular instrument you'd like to wrap it before you go to your website and show us your business model at Trend Trading DNA.
Okay, yeah, I'm looking also at this this trade. This is the Swiss. Yeah, it is a good trade. It will be a good long dollar trade, as I can see it from here. I expect a little correction again, as in a dollar, is it in the XY, but looking on the upside, it has a lot of space all the way till 1 and above it, and possibly even higher on the wings of a stronger dollar. Of course, it all depends on the geopolitics, as you know it. The Swiss and the end will be on influence by this ongoing geopolitical risks, but looking simply at the technical picture, at the market and the dollar, if the dollar is going to be much stronger and yields to rise and interest rates to rise, then this could be a particularly good trade for the buy side.
Okay, I want to ask you a risk management question. I notice you mentor.
Okay.
What do you tell your mentees as far as red events, such as the Fed this week or the NFP last week? Do you tell them to trade through it, hold through it? How do you tell them to manage risk in thin markets on big news events?
Yeah, I'm trying to avoid this trading around the big market events, but sometimes it is not possible, and I'm trying to teach them that it is important always, if we want to use these intraday swings. Sometimes I like to trade on a daily closes, and sometimes I also like to trade intraday swings. And when we have these big events, I'm telling them to wait, possibly for these events to pass, or if there is a good technical setup, then to have a small risk and a close stop loss, because every trade has to have a stop loss placed immediately after the trade, and not looking later to place this stop loss and looking to move it. There is no moving of the stop loss. If it gets hit,
no cancel if close on stops.
Yeah,
Don't pull your stop because you don't want to have it be elected.
Yes.
Something else I noticed on your website, Alex, is that you're looking for good traders. That you recently begun a proprietary trading shop, and I know we have a lot. I know we have a lot of great traders that attend here every day and face and watch the videos. So maybe you want to talk about what the opportunity is. What do you look for before you turn over equity for people to trade, and how are they compensated?
We are looking, no matter of their experience. Of course, it is good to have the experience, but we will teach them how to trade intraday, not to have these positions overnight. So it is excluded from this prop trading, and after the intensive training that they will have, we will have no obligations for them. We will just give them funds to trade, and we will make a profit split on a 50-50 basis at the month end, after profit target reached. And if they have losing positions, they will not be obligated to cover it. So it is a pretty good opportunity for everyone who wants to show their skills, want to try to trade as much as they like on a daily basis, but within strict money management rules, which means maximum daily loss $1,500. And of course, we need to see some profit target, minimum profit target, before we share a profit.
Well, Alex, I want to wish you and your family and your co-workers and everyone in your life a Merry Christmas and a great 2018. I want to thank you for being with us today, and anything you want to wrap it with. I see you also do it. You do everything. Asset managing, mentoring, subscriptions. So you're a one-stop shop for anything that you could possibly do in the markets.
Yeah, we do a lot of copy trading also, so clients could just leave the trading for us. We do asset management. There is a subscription service which will give them analytical views, and it will give them trade alerts. There is a mentoring, so everything is wrapped up here, and we are trying to give traders what they need for a successful trading opportunities and successful traders building life, I will say like that. And also, Dale, I would like to thank you for always giving me a chance to speak and share my views, not just here with your team, but also on a Twitter feed. I learned a lot of good things from you, not only in trading but in life, and I wish you and your viewers, your team, your co-workers a lot of good health in the next year, and good holidays.
Thank you, my trading warrior brother. That's Alex Ivanovich. You could follow Alex at Alex, ALEKSFX. Or through my stream at Forex Stop Hunter. Good hunting the rest of the week through all these central banks, and I look for continue to appreciate all the great looks I get in my stream, Alex. Thank you very much. I'm glad that our paths have crossed. So all the best to you, buddy.
All the best to you. Goodbye. Thank you.
You're very welcome, and all the best to all of you here in FACE. Join us tomorrow. My friend Giuseppe Bazil will be with us. You may know him from FX Street at Golfer. And looking forward to talking to Giuseppe and see what happens with the Fed. For all of you, go ahead and sign up for the trial. You're welcome. And also, you were complimented, Alex, if you're still here. Excellent job with your English being the second language, and great look. So everyone, remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios. Thanks again, Alex.
Goodbye. Thank you.